Welcome to The Explainer. Today, we're looking at something pretty weird happening in the NFT market in 2025. People are creating more NFTs than ever, but at the same time, sales are actually down. So what is going on? Let's get into what this big shift from hype to real substance actually means for creators.
All right, let's just rip the Band-Aid off and ask the question that's on everybody's mind, the one you see in all the headlines. Are NFTs finally truly dead? Is the party over for good?
I mean, if you just glance at the numbers, it sure looks that way. Total NFT sales dropped by a massive 37% in 2025. You see a number like that, and it's really tempting to just say, yep, case closed. But if you dig just a little bit deeper, you start to see a much more interesting story.
See, what we're really witnessing here isn't some kind of extinction event. It's more like a great cool down. The market isn't just vanishing into thin air. It's changing. It's transforming. And that means there's a huge shift in what buyers are looking for and what they're actually willing to spend their money on. So, let's talk price. Back at the peak of the boom, the average NFT was selling for around $400. Fast forward to 2025, that number has plummeted to just $96. So yeah, people are still buying, but they're definitely not spending like they used to. And this is the real paradox, right? Prices are down, total sales are down. You'd think that means nobody's interested anymore, but that's not it. The market is actually being driven by a massive explosion of supply. This is the other half of the story. Check this out. In 2021, there were about 38 million NFTs out there. By 2025, that number ballooned to over 1.3 times billion. That's a 35 times increase. Thanks to super easy minting tools and that gold rush feeling, the market is just totally flooded. So here's the absolute key to understanding this. The buyers didn't all just pack up and leave. Their attention and their cash is just spread incredibly thin across this massive, enormous inventory of stuff. I mean, when you're just one project competing with over a billion others, how on earth do you stand out?
And this new reality is forcing a huge change in strategy. The projects that are actually doing well now, they're not selling lottery tickets anymore. They are finally moving away from pure speculation and starting to use NFTs for what they were always supposed to be, a digital wrapper, a way to prove you own something real.
This whole idea of linking NFTs to real-world things, well, it leads us straight to the most powerful trend in the market right now, tokenizing physical art. Think about it. In a digital world that's drowning in infinite copies, the biggest power move you can make is to tie your NFT to something that is verifiably real, and most importantly, scarce.
And the difference is, well, it's night and day. On one side, you've got the old digital-only market where you can make an infinite supply, and the origin story is, let's just say, kind of vague. But on the other side, tokenizing physical art solves those exact problems. It has built-in natural scarcity and a history that collectors can actually verify and trust. So why does this work so well? It's because physical art brings its own credibility to the party. It already has that natural, undeniable scarcity. It's a one-of-one. It comes with a rich story, a history, a real-world value that acts as an anchor, so the price isn't just floating on a cloud of pure hype. Okay, so for all the artists, galleries, or brands out there watching right now, listen up. This isn't just a cool theory. This is a practical, winning playbook. Let's walk through the 6 simple steps to do this right.
The process itself is pretty straightforward. You start by digitizing the art, of course, but the real magic happens in the next steps, packaging up its entire history, clearly defining the owner's rights, and this is a big one, being disciplined with your supply. And don't forget, the last steps are all about smart distribution and finding the right partners, not just smashing the mint button and hoping for the best.
I really want to zoom in on step 2 for a second, because in this kind of overcrowded market, this is your edge. This is how you win. It's not enough to just show a picture anymore. You have to digitally package the entire story. The certificate of authenticity, the artist's own statements, where it's been exhibited. This is your proof.
So what does this all mean for the big picture? Well, this playbook we just talked about, it's actually a sign that the entire NFT market is finally growing up. It's all about a new set of rules that are built on one simple, powerful idea: trust. And you can really see the shift here. We are moving away from a market that was all about hype, endless drops, and vague promises of future value. The new market, the one that's actually working, is built on trust, on substance, on disciplined supply, and on clear, real-world utility. The game has totally changed from who can yell the loudest to who can actually prove their value.
So, if you take away just one thing from all this, let it be this. Collectors have learned their lesson. They got burned by the hype, and now they are actively, deliberately looking for signals of trust. They want proof, they want to see the history, and they want to know there's real, tangible value attached to what they're buying.
And all of that leaves us with one final, crucial question for any creator who wants to succeed in this new world. In a market that now rewards trust above everything else, the way forward isn't about being the loudest voice in the room anymore. It's about being the most credible one. The only question is, how will you prove it?